Leith Van Onselen. Leith is chief economist and co-founder of Macro Business. Leith, I quite like you guys have a different take on things often. How does it look? What does no change mean to you, Leith Van Onselen?
Look, Steve, it was pretty much as expected. The governor's statement, the Reserve Bank governor's statement, basically pretty much every economist around the nation expected rates to be held on hold. And it's pretty, obvious the reason why. Basically, inflation is falling. The Q4 inflation print came in at 4.1%. The Reserve Bank had it forecast at 4.5%. Economists had it at 4.3%. So it undershot there. We've also had, obviously, the labour market's deteriorated. We've had incredibly weak retail sales. So the economy is softening. And basically, I think the Reserve Bank governor took a pretty, sensible position. She basically said that, yes, inflation's falling, it's still too high. We're going to basically wait for further data to form a view on what we do with interest rates. So what that basically says is if the data comes in stronger than they expect, they could hike. And if it comes in weaker than they expect, they'll probably start cutting rates. And my personal view is that the Reserve Bank's probably going to start cutting rates in the second half of this year, because by that stage the economy will have weakened, and also inflation will continue to fall, which it is doing globally. So, basically they're sitting on the fence, which is what pretty much everyone expected.
All right. So sitting on the fence is the consensus. I don't trust the figure, to be honest, Leith. Here's why. It's an average figure of a basket of goods, measured, I think. But for my listeners, they can't avoid fuel, and that's up something like 12%. They can't afford food, that's up around about 8%. Housing and rent here in Queensland is just stratospheric in terms of increases. These are what what the consumers are feeling. I'm not sure. Doesn't that inflation figure mask these specific areas of things that my listener and I cannot avoid tackling?
Yeah, look, certainly, it all depends on your circumstance. So, for example, if you're a renter, there's a pretty good chance that your rents are taking up over 30% of your income.
Yeah.
Especially given the rental crisis we have. However, rents in the CPI basket only account for 6%. So basically 6% only comprises rents only comprise 6% of the overall CPI basket, whereas if you're a renter, it's going to be, probably close to a third of your expenditure. So, obviously if you're a renter, it's a very irrelevant figure. But yes, that's just the way the CPI works out. There is another measure which is better, which is called the Australian Bureau of Statistics Cost of Living Index. Mm-hmm. So that's generally released a few weeks after the CPI print, and we haven't had December's yet, but the September quarter cost of living index actually rose by 9% if you're an employee household. So what it basically does is it splits households into different segments. So yep, employees, which are the bulk, and then it's like self-funded retirees, people on benefits, etc. For employee households, the last cost of living index to September said that our cost of living went up 9%, which was nearly twice what the inflation rate was at the time. So look, take this all with a grain of salt. But in terms of what the RBA does with interest rates, the CPI is the key indicator. But for your cost of living, it's pretty irrelevant, and it depends what your circumstance. If you're a renter, you're getting smashed. If you're a mortgage holder, you're getting smashed. Whereas if you're a wealthy retiree who owns your home outright, you're probably doing very well, because you're obviously not impacted by the soaring rents nor the mortgage repayments. So it all depends on your individual circumstance.
Leith Van Onselen is chief economist at Macro Business. This is ABC Radio Brisbane. Steve Austin's my name. Leith, you may recall about a week back, forgive me, I think my timescale is slightly a couple of days out, a number of state premiers demanded that the Reserve Bank lower the cash rate. I was very surprised to hear that, but maybe that's politics. But is there any indication that the Reserve Bank would listen to the demands of premiers?
Yeah, look, it was a very interesting statement from the state premiers. So basically, the Reserve Bank's supposed to be independent, and it's supposed to not get political pressure on it. And obviously the state premiers, I think it was Brisbane, Queensland, and might have been Victoria as well, came out and basically demanded that the Reserve Bank cut rates. I don't think the Reserve Bank will listen to them. They'll obviously just look at the data, which is what they should do, and form a view going forward. I think if the state premiers are worried about this issue, they probably should turn their focus to the federal government and call it and demand that they cut immigration, because Australia's super high immigration is one of the reasons why we've got strong inflation, and we've seen that, for example, through the rental market.
Just explain that to me, because my listeners are very worried about this question, because as you've told me previously, that the migrants are flowing into New South Wales and Victoria, and people in New South Wales and Victoria are getting out and moving up here because they can't afford the housing down there. Explain why immigration is a problem, because even today I've had the building industry on saying we need skilled migrants to build the homes and apartments we need here in Queensland, and the commercial projects, let alone the Olympics. They're begging for them to come in.
Yeah, well, they always do that because they want to keep the pressure on demand, because obviously more demand means more business for them. But the whole notion that you bring in migrants to solve a housing shortage caused by too many migrants is dog chasing the tail economics, and it doesn't make sense. So, for example, it isn't a problem with migration per se. It's a problem when you run the migration system at a level that is well beyond the economy's capacity to supply housing, supply infrastructure, and also to protect the natural environment, so water supplies, that sort of thing. And there is just not a shadow of a doubt that Australia's immigration program in the last 20 years has been far too high, because we've all lived it. Housing hasn't kept up, infrastructure hasn't kept up, and once this period of wet weather finishes, we're going to have water shortages as well. So basically, we're seeing it in the economic data, and we're seeing it through the rental market, because obviously we've got record low rental vacancy rates, and we've got demand well ahead of supply, well ahead of the ability to build homes. And what that's basically doing is it's placing upward pressure on inflation, not just through rents, but also through the cost of new homes. It's putting upward pressure there because of excess demand, and that's stimulating inflation directly. And it's also one of the causes of our cost of living pressures. And there's another aspect to this, Steve. It's actually pushing the state governments into debt, because the federal government collects 82% of the nation's tax revenue through personal income taxes, corporate taxes, etc. Mm-hmm. They gain from immigration because you have more taxpayers. The problem is the cost of this excessive immigration falls on the states, because the states have got to supply the infrastructure, they have to supply the social housing, they've got to supply all the government services, and they're all going heavily into debt to try and keep up with this population growth. So what the states should be doing, instead of attacking the RBA for their one instrument, which is interest rates, which is very blunt, they should be demanding that the federal government cut immigration to a sustainable level, so that we don't have to build so much infrastructure, we don't have to try and keep up with housing, because we never do, and to take the pressure off inflation. So that's to get back to your initial question, that's what the state governments should be doing, demanding the federal government slow immigration to a sensible and sustainable level, not the levels we've been seeing in recent years.
Leith Van Onselen is my guest, Chief Economist at Macro Business. Leith, before I let you go, the new RBA communication model was delivered yesterday. 2 days of deliberation, or day one of deliberation with all the departments in the Reserve Bank, and then released the monetary policy statement, and then the governor actually fronts the media on the same day. Any revelations for you?
Not really. Look, to be honest with you, as an economist who follows this stuff, it hasn't really changed much. The only difference is that we get the statement of monetary policy at the same time as the decision. Previously, we've gotten it, a few days later or a week later or something. So, as an inflation watcher, it wasn't really much different. Basically, I read the initial media release that comes out at 2:30 when the decision comes down. That's pretty much what forms your view, and all the rest of it's just a bit of cherry on top. So, not a huge difference. It's just really incremental. And the bigger thing is the RBA meets every 6 weeks now, which is kind of in line with most other central banks around the world, instead of once a month. So that's really the big change.
Appreciate your time, Leith. Thanks for coming on.
Yeah, no worries, Steve. Anytime.
Leith Van Onselen, Chief Economist at Macro Business.